Hi, Ken from Avvora. Hope you had a fantastic weekend. So today I want to just talk about a little bit about the purchasing or identifying costs of purchasing. So yes, last week we talked a little bit about the borrowing capacity and how much you would need. And I guess a lot of times there's a bit of misconception or miscalculation in terms of how much is actually needed to purchase a property. So apart from the purchase price, which is the main component, then off the back of that you need to determine your loan costs. There is also a purchase fee, and the smaller items tend to be the registration of the mortgage and also the solicitor's fees and also any application fees. But the single most largest item would be the stamp duty. So not unless you are eligible for your first homeowner's grant, and in certain circumstances you are able to waive or have a concession on the stamp duty, it can be a significant amount. So when determining how much a property is worth, the easiest one for New South Wales specifically is to add 5% to the purchase price. So for example, if you're looking at a $500,000 property, you'd be adding 5% of that, which would be $25,000 to cover all costs. One thing that you will be able to do through a broker is to go through what's known as a funding position, which shows how much the bank will loan and also how much savings you have, and also the cost of the purchase of the property from the actual amount that you need to pay the vendor, and also the transaction costs. So those are some of the things that you should look out for. 5% of the price of the property, that's what you're taking into account when working out how much a property is, and that's the tip for the day.